If you're trying to understand how to decipher when to enter into a trade and what to look for in a very simple way, here is a data range sessions slash liquidity video to kind of address all of that. So when you're trading, you should know that you can't trade at any time that you want to. Yes, that's what everyone says, especially if you're looking at futures and Forex. The market is open 24/5. You can trade at any single time. But to be a profitable trader, you have to choose distinct times and where price moves to show you the best movement for that day or for that session. You should know that price has three main sessions that most people look at. We're going to break down each session, what the price data ranges look like, and how you can consider entering into each session's trade if price presents itself. So I'm going to go down to the 15-minute because I like looking at the 15-minute. I think it's ideal. And the next thing I'm going to do is mark out sessions. So sessions for Asia, because there are three sessions, you're going to start at 2000. And I'm going to change this pink to black. So you're going to start at 2000. From 2000 to midnight, this is your Asian session. Let's get midnight right. All right. And then from 2 a.m. to 5 a.m., this is going to be your London session. And then from 7 a.m. to 10 a.m., this is going to be your New York session. And I'm going to put letters so we know. A is for Asia, L is for London, and Y is for New York. Great. Now that we have those sessions, let's go down into a lower time and break down what price looks like. But before we do, let's mark our sessions, their height and their low. So we're basically looking for the highest point price has been in Asia and the lowest point price has been in Asia, and we're drawing a line. I'm going to use this trend line instead. This is the highest point right here that I see price for Asia during this session. I'm going to draw a line here out. This is the highest I see price, and I'm also going to draw a line for the lowest point I see price. This is what it's called. This is what's called like a data range. So this is how low price has been during this period for Asia session. This is as high as it got, as low as it got. You can take a measuring tape and measure what the range was. Price moved about 84 points, which is great for Asia because price doesn't move a whole lot. We're going to do the same thing for London. London, this is the highest London got up here. I'm going to draw a line there, and I'm going to take another line. This is the lowest London got down here, and draw it out. So let's say we're in London and it's about 3 a.m. and we're interested in taking a trade. I'm going to look for a place where London's price crosses Asia's price, where they interact. And so I see right off the bat, London right here got lower than Asia's price. So I'm going to drop down to my 5-minute and take a closer look in this session and see if I can enter into a trade. This is how you determine if you can enter into trades into certain sessions. So right off the bat, this line demarcates the difference between Asia and London. And price comes down and gets lower than this Asia's lowest line. This is just a lull time here between midnight to 1. It's not an ideal trading time. But price comes down here at 2:05, consolidates a little bit, and has a really nice big candle movement. And what is created in between, if you've watched the previous video, this is a fair value gap. I'm going to take my square, top of this to that, and draw it out. And what do we notice? Price enters into this and reverses back out. That's a great way to take a trade. What are we looking at when we saw all of this? We're looking at the fact that we're at the right session, London, at the right time, 2 a.m. We saw that Asia had a low that was previously marked over here. But at the same time, we saw liquidity being utilized in this trade because the session was marked at its lowest point in Asia, and we saw London come down and sweep that low, meaning it created a new low and reversed back upward. This, if we watched the previous video, is a sign of liquidity. So we have liquidity, the right session, we have price being taken out, and we have a fair value gap being marked. We can easily enter into those trades with those confluences without having to look for an SMT divergence or anything like that, and take the trade up to the high for Asia and call it a day. Now, if you're more of a New York trader, we can look at that and see what price does. So we're going to compare London's low and London's high to what New York plans on doing after 7 a.m. So this is 7 a.m. and we're looking for price to interact with London. So right off the bat, price does what? It interacts right here from London session. Price in New York around 850 goes above and it starts to reverse back down. Let's look for an entry here if possible. Right off the bat, I notice there's a gap here. I'm going to take my square, draw it. I see a price goes in and maybe comes out. Obviously it's a failed trade because even though it comes down here, it starts to reverse back upward. And that's totally fine. We can also break this down into the 1 minute to see if we could find an even better way to scalp, because we could still take that trade. We just have to be quick about getting out of it. So here we are. Again, this black line is from London's highest point during London session. Now we're in New York and we see that price has interacted with this trade. Now, if we zoom in, price has gone up here, it's come down. It created a gap, but no candles entered in. There was this candle here, but it closed above it and the next closed above it, so this trade would have been invalidated. However, if we give it some time, and we remember that market actually opens up at 9:30 right here, we can see that price is starting to show a downward move. So we see that right here is a gap. We can put a box and a box here. Granted, it's not gigantic. And if we zoom in, we might even be able to draw this a little bit better. There we go. Draw this out. We see that price enters into this little space here. Because again, we know that this line, this black line, is London's highest point. We're looking at liquidity where price goes above this key level and reverses. We're looking for a fair value gap to be done during this session of New York. We saw the fair value gap is created and the price respects it. We can enter into this trade and actually come out right here at this swing low, or as you can see, we could aim for a lot higher and take partial profits here and total profits down there. And this would have been a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 minute trade if we held it all the way down here. And this was in New York. So I hope that explains, gives a little bit more understanding to looking at sessions and using that as a way to enter into a trade, and then adding it with the fair value gap confluence that we've used before. I hope that helps.